21?
First one of 2021. Welcome back, everybody. We missed you all. I know we skipped last week. You know, Ben wanted to screw around and not do any work, so we took it easy.
I needed a week off, everybody, even though we actually did a lot of work. Yeah. You know, we didn't actually take any time off. But glad to have everybody back. We're excited. Kick this 2021 year off with our Money Mondays. We're going to keep going every week just for you guys because we like educating the space.
Yeah, but hopefully people had a good New Year's.
Yeah,
good Christmas.
Yeah. It's a good holiday season, right?
Then what'd you give me for Christmas?
Buddy, I got you world peace.
Some coffee, Starbucks. That's all I asked
Starbucks
for.
Life.
He didn't even bring
what did you want,
He didn't even bring me a coffee from Starbucks. We met up the day after Christmas, but he did not bring me a coffee. So
no, you're just drinking yours too quick. So we got a coffee maker.
We do have a coffee maker. That was our gift.
That's why we don't have as much Starbucks these days.
Yeah,
we're trying to wean ourselves off.
Yeah, that's not going to happen.
So what are we talking about today, though, man? People want to get to the meat here.
We are talking about how to offset your taxes through multifamily real estate. Mouthful. I was just going to say saving taxes, but it's an important thing, right? We know it's about to be the tax season for people, right? I don't think we're going to get a delay like we did last year from COVID, right? The IRS hasn't announced one as far as I know. So I think people, from now through April, it's going to be about, tax season is going to kick off in high gear, which reminds me, I got to actually email our CPA something. But saving taxes is an important part of real estate, right? It's a big reason why a lot of people invest in real estate.
No, and if you don't know that is one of the biggest reasons that we like commercial real estate because of all the tax incentives that you get. So people really need to pay attention to that, right? It's not, everybody kind of gets caught up in the cash on cash returns and total returns and the cash in your pocket, right? But you have to realize the less money you have to pay the tax guy legally, right? This is all legal. The more money stays in your own pocket, folks. So
as Tom Wheelwright says, right, you are more patriotic if you do the things the government is asking you to do to save on taxes. So
you can't hate on us for doing
for those that don't know, Tom Wheelwright, really popular, really savvy CPA. So and I think it's a fair point, right? There are incentives that the government adds to basically let people reduce their tax burden by doing certain things the government wants. One of which is investing in real estate. So it's an important part of the thing.
It's what we're talking.
Create jobs. Housing, a lot of reasons why.
It's not the only reason, right?
Yeah.
We're spurting job growth, right? We also obviously provide housing, so they incentivize commercial real estate investors, through tax.
So that's what we're talking about today. Money Mondays. We do this every Monday at what time, Ben?
3:30 Central.
3:30 Central every Monday. If you have any comments, questions, ask them live. We'll go ahead and answer them live. And really, we'll present about 15, 20 minutes, and then we'll do Q&A at the end. And really, that's the best part. That's where we have fun. It doesn't have to be about what we talked about today. Feel free to ask anything you want to ask. We will share and do that.
Don't you say it. Don't you say it.
Say what? No, you can ask why Ben's bald. So, I got to kick that off for the year. But, Ben lost his hair many moons ago. If people have questions, feel free to ask. But otherwise, let's kick it off. So
let's get right into it, man. So we're talking taxes, So what are some of the ways that you can offset your taxes, right? So let's talk about this in the lens of you're a passive investor in a syndicator's deal, right? Let's look at it through that way. Right? So how can investing in somebody's deal as a passive investor help you potentially offset some of your own personal taxes?
Yeah, so whenever you are investing in someone's, it's called being an LP. Let's just call it what it is, right? You are a limited partner. 9 times out of 10, and again, not every deal is structured the exact same, but you're usually investing in a new entity, a single purpose entity is what we call it, right? That is buying that asset. And as an investor, you are buying shares in that entity. Mm-hmm. All right. Hopefully everyone gets that. So
we have a business. This business,
exactly. We have a business. This business, is owned by many shareholders, all the LPs and GPs. Right. That business is going to get a loss because it owns that piece of real estate.
Okay.
Now, fast forward, right? So now, how do we get the loss? Right. Is really the next question. Right. And so the government, for those of you that might own a house, right, you get to depreciate your house over 27 and a half years.
Yep.
The government says you basically take the price of your house. And again, it's the physical house. It cannot include land because land does not depreciate.
Nope.
You divide that over 27 and a half years, and each year you're taking that piece as a loss. Because the theory is that essentially that house, the material, gets worth less each year. Mm-hmm. Now, whenever you go to sell, different story, but that's the high level thing. Now, in real estate, we can do some things to kind of help juice that, right?
On the commercial real estate
side. And actually, you can do it on the residential side. And there is a company that helps. For those of you that own a residential portfolio, there is a company I found out about that will let you, because the reason why people only don't do it on the residential side is because cost. There is a several $1,000 study that you have to pay, what we call a cost segregation study, to do what we're about to talk about. But actually, there's a company that now does it quasi-automated on the residential side. So you can do it on the residential.
Name drop, come on.
Yeah, I don't know the name of the company. That's not, otherwise I would. But the important thing is that now, rewind, right? You can do something what we call a cost segregation study.
Okay.
And what that means is a company, a professional engineering firm, will come out and basically...
And we use Madison Crest.
We use Madison Crest.
Wants to know, right?
And essentially they will basically say, you know what, this apartment has 200 stoves. It's got 15 toilets. The life of a stove and a toilet is not 27 and a half years. Right? And so some things you can accelerate, you can accelerate it, right? You do cost segregation study, you're saying, okay, the life of these things are different. Right, and then therefore we can get more losses on the front end versus the back end.
More depreciation on the front end, right?
Yes.
That transfers as a paper loss onto the partnership's tax return, right?
Yep.
And as an owner of the partnership, right? Remember, going back to what he mentioned, you're an owner in a partnership, right? You're going to get your pro rata share of that depreciation, therefore loss of the partnership.
Yes. So depreciation is just a loss, even though we have most deals we distribute money, but we also have losses. So the losses actually offset what we've given investors, right?
Yep.
And so with the cost segregation study, plus there's another thing called the accelerated depreciation. I don't want to get into that. But anyways, year one, we have a lot of losses. And really, for perspective, most deals, we're seeing 40 to 75% of what is invested as a loss in year one. It's huge.
Yeah, it's huge.
And so investor that puts in, $100,000, they're probably getting $60,000, $70,000 losses that year. Now, how does that affect you as a person, right? Whenever you have losses, you can take those losses and offset that against income. Now, I want to caveat that. Right, go talk to your CPA. Everyone's situation is a little different. There's certain types of losses and certain types of income that can cancel each other. There's the question of, are you a real estate professional? There's a lot of things to consider, but just know, right, there's kind of ordinary income and there's non-ordinary income, and different buckets of income can offset differently, right? There's a whole set of planning that you should be doing with your CPA, but for
lot of planning.
A sophisticated investor, right, we have investors that literally their number one reason for investing is to get the losses.
Yep.
Second, the number one reason is to not to lose money.
No,
the second most important reason is to get the losses.
Yeah.
The third most important reason is actually generating new money, right? Mm-hmm. And so again, it's a very powerful vehicle. So if you're someone that is getting a huge check to Sam, going to have to give a check to Uncle Sam this quarter, right? You should really ask yourself, okay, what could I be doing differently with my tax strategy to help me reduce my tax burden?
And so one way to also look at it too. So say you're a passive investor and you have $50,000 of passive income that has come in that year, right? But guess what? You have $50,000 in losses, right? So normally if you didn't have that loss, you're going to pay tax on that passive income, right? And I don't know exactly what it might be. Everybody's situation is different, right? Assume it's 15 to 25%, maybe even upwards of 30%, right? But if you have that loss against the income, right? Now you're at a net zero. You're not getting taxed on anything. Right? So you're pocketing that 15, 20, 25% and not having to pay Uncle Sam, right? And this is all completely legal, folks, right?
Yep.
And so, this is why, like Ferris had mentioned, that last quarter of this last year, we were bummed out because we didn't have a deal, but we had a ton of people reaching out to us. You got a deal, you got a deal, you got a deal, because I want to deploy capital before the end of the year so I can get the depreciation and therefore help me offset my taxes that are going to be due this year in 2021, right?
Yep.
So, that is a big part of anybody's strategy, or should be a big part of anybody's strategy that wants to invest in commercial real estate, is the tax benefits that we can see, right? So, we talked about being a part of a partnership and having a pro rata share, and we're selling shares of the LLC, right? What does that translate? What's the document that they get?
Yeah, so if anyone has a business, you might have heard of what's called the K-1, right?
Yep.
That is the IRS legal document that any shareholder of a business gets, right? And essentially, whenever we do our losses, right, we do all, the CPAs do all the math, and then that gets divided out to everybody pro rata.
Yep.
And basically, they get a K-1 from us, which they take to their CPA, says, look, I generated a paper loss of $50,000 on this investment. That CPA takes that loss and applies it to the rest of their taxes and keeps rolling. Yep. And so that's what a K-1 is. It's a very important document. You should have one for any entity that you are a shareholder in.
Absolutely.
So, it's a busy, let's just say February is a very busy time for me and Ben, because we're having to work with the CPAs to get all that squared up and ready so we can get that out to investors.
And just so everybody knows, right, I think there's a legal requirement to have it out to, your investors in the properties, right? Anybody that's owed a K-1 is owed it by March 15th. Right, so usually, like Ferris has said, we have to wait until January 15th to get the final financials from obviously December, right? And then it's like getting shot out of a cannon for the next 6 to 8 weeks, right? To make sure that you can get the property's tax returns, make sure that all those K-1s get disseminated securely and safely over to your investors.
It's about the only time of the year that I see Ben actually do some work. So,
No, usually for everybody, and everybody that is our investor kind of knows that I'm usually the one kind of running with that one. And it's a very chaotic process. We've since been able to streamline it through some of our investor portals and stuff like that. But each year they have different questions that they might ask of our investors. So then we have to go back and ask those questions. So sometimes it can be a little bit stressful, but ultimately that's part of the product that you deliver to your passive investors. So you really need to understand that, and you need to have a CPA that understands that process too, right? Your run-of-the-mill, no offense to anybody that's a run-of-the-mill CPA, might not fully understand all the tax benefits that go along with commercial real estate, right? So we always suggest somebody get somebody that knows real estate, right, to do the property tax return. It's not as important as your personal tax returns, even though they should have an understanding of it. But definitely at the property level, they should know and understand.
And actually, speaking of that, so next week, next Wednesday, I think, we are having our online virtual meetup, right? Our Texas MFM meetup. I don't know what the URL is off the top of my head, but go to disruptequity.com. We'll have a link there for it, right? Go to find our meetups page. And we have Bradley is a very famous real estate CPA. Yep. He is going to be doing a deep dive on how you as an investor can get the benefits and what that looks like.
And he'll go through a lot more.
Ben and I are not CPAs. We're not going to answer those kind of things. We
probably should have had a disclaimer. We are absolutely not. We suggest that everybody that's listening to this that has questions, do not ask us about tax accounting, all that stuff. That is definitely something you need to ask your own CPA, right? It's important.
But definitely I recommend people register for that, check it out, and then Wednesday you can ask the guy. It's a free way to ask CPA questions, all right? That's how I look at it. I mean, really, come prepared with your questions, and I've seen it because we've done one before where people come with their own.
No, you're pretty impressed because you guys did it. You guys had done it at the national.
We did it at our
level,
national
right?
MFM Live. So we brought the same guy to our Texas version, and he'll dig in and start to really talk about the good, the bad, the ugly, even stuff about the new tax laws that passed, right? What benefits people, and how to take advantage of those. And so, highly recommend people checking that out. It's a good way to ask a real expert questions versus kind of these two yahoos up here. So,
well, you're the yahoo. I'm not the yahoo.
So with that said,
so let's keep moving. So, do all investors need a CPA? Yeah, it all depends, right? I mean, if you want to do your own tax return at the personal level, that's up to you. I would suggest when you have enough money to put into a deal, you should probably have enough money to pay a CPA because they're going to help you maximize your tax benefits. And that's not even just real estate. That's just in general and just in life, right, folks? So, pay the extra $1,000 to get somebody that knows what they're doing because that's ultimately going to be to your benefit, right? It's going to keep more money in your pocket, right? So, ways to vet a CPA, I think it goes along with any vendor that's in our space, right? Ask for referrals, right? We've had several that we've worked with over the years, and we've kind of landed on one of our vendors out of DFW. Her name's Deborah Pritchard, MRM CPAs. Mm-hmm. They're good folks. Deborah also has done a fair amount of passive investing too, so she understands how all this works. Yep. So not only is she an investor, she's also a CPA. So that's a good combination to have, right?
Yeah, definitely talk to people, understand it. Because again, like Ben said, there's a difference between a CPA, a real estate CPA, really like a syndicator CPA, and even hey, I am a high net worth person. I need creative tax strategies. What are the they're very different people, right?
Absolutely.
Different mindsets, different spaces. And it's not that there's one better than the other, it's just that's where they're focusing their efforts and energy. So make sure you have these different people. So if you have your own asset, like I said, Deborah does our books for our properties, right? But again, while Deborah is very knowledgeable and everything, she might not be the person that tells me about oil investing and what I can generate losses there, right? And so you just understand there's different CPAs for different roles, just like within real estate, there's different asset classes. CPAs have their own delegations.
And tax strategists, right? Like that's kind of tax strategy might be different than somebody that does the books, that might be different than somebody does the tax return, right, folks?
Absolutely.
So there's just different levels and different sophistications and experience.
Yeah, so really quickly, Money Mondays, we do this every Monday, 3:30 Central, right? Today we're talking about offsetting your taxes through real estate. And really we do about 15, 20-minute presentation, a bunch of different topics. If people have future topics, let us know. We're happy to answer those. And then we'll do about 10 minutes Q&A. And so if anyone has any more comments, questions, really quick, let me just run through the questions and then we can continue on. So Savion says, what's going on? Welcome back 2021, one of our top supporters.
We appreciate it.
Holidays were great, looking to kick ass in 2021. Yeah, welcome.
Heck yeah,
keep
man.
it PG. Chat says, Happy New Year's, Ben and Ferris. Chat, long time no see. Hope all is well.
Chat.
Hedda, how are you been? Long time no see as well. Happy New Year's, guys.
All right.
And then
Happy New Year.
Jefferson Gone, Happy New Year's. Thank you, likewise.
Thanks,
and then
guys.
Larry, my friend, long time no see, says Happy New Year's, fellas, as well.
We appreciate that, guys. Yeah. It's good to
So
see
I
everybody
hope
back.
to see you guys. You guys should come out to our conference coming up. We'll go to that here at the end.
Should come out there. 'Cause
Definitely
there's gonna be some stuff on taxes, right?
Absolutely.
I mean, we always include that because that's a big part of what we do.
So let's keep going.
Just a bunch of Happy New Year's.
All
Nobody
just
has any
Happy New
questions.
Year's.
Well,
So-
definitely don't want to ask
So
us
if
a
anyone
bunch of-
has any comments, questions, feel free to ask them, right? We are, I guess, in the questions part of the show. Did not realize
We're
that.
open Q&A right now, buddy.
Yeah, so if anyone have questions,
And it
we're
doesn't have to
happy answer
necessarily
them.
be about today's topic, right? Or if you want to just drop a comment in the comment section and ask, what would you like us to talk about, right? You know, we're always trying to make this interactive. We want comments, we want questions, we want people to provide some feedback.
Yeah.
On what we're doing. That's a big part of what we're trying to do and try
Yeah, but
to grow the
speaking of
show.
taxes, I guess I do have a little short story to tell, right? We had one investor, who's a friend, he invested in his first investment, right? Thinking that asset, he invested $75,000.
Yep.
And he got his K1 and he called me and he's like, I don't understand, you guys are white collar criminals. I'm like, what do you mean? And he basically said he invested $75,000 and on that deal he got a $60,000 paper loss. And we had done a distribution. So he didn't quite understand how he could put in essentially $75,000 and get $60,000 of losses year one. In his case, he's a real estate professional, so he's able to even really take
That's even
advantage of
better.
that to the full
You know.
extent. So it's a very powerful vehicle. And I thought that was just a funny story where in his mind, that was his first time investing in real estate. And he, even though he's been around real estate, he knows a lot about it. He just it was an eye opener for him, right?
Yeah.
And he's seeing how it impacts him in his role and, kind of waking up to that. So.
And one thing I wanted to point out too, folks, Ferris kind of touched on it a little bit, real estate professional versus not. That's something that's very, very powerful for people that are doing this full time. You should really look into that, and you should look into that with your CPA. It can blow your tax benefits into another galaxy if you know how to utilize that properly, right?
Yeah.
Not everybody's going to fall into that category, but if you do, you're in good shape.
Yeah, so let's see. So let's go through some questions. So Nilesh asked, can you share CPA Deborah's contact information, please? Good question. Let me see what it is.
We'll dump that in the comments. She's great gal. Obviously, she's going to be probably really busy this time of year.
Yeah,
but,
mrmcpas.com. So mrmcpas.com, and her name is Deborah Pritchard, so you can find her there.
Yeah.
So, definitely recommend, really nice gal, highly recommend her. Mike, how you been? Long time no see. He's asking, how can you offset taxes through multifamily LP investing if you are not a real estate professional? Great question.
So,
and
I wanted to answer that one way. Ferris might answer another way, right? So if you have a lot of passive income, right, then you can offset said passive income with those losses, right? If you don't, right, and once again, you need to talk to your
non-ordinary
CPA.
income.
Yeah, then you might not be able to, right? But say, like I use my example, right? Say you made $100,000 last year in passive income, right? But you had $100,000 in losses. Well, you can actually use those losses, right, to offset each other. So, but sometimes that's not always the case. It just depends on what the income comes in.
Different buckets of income. Different. So people will do a couple things, right? Some people will generate losses in stocks and other things in that year, then sell in the next year to kind of help cancel that, right? Mike, I think your question is, which is kind of the next thing you asked, is am I correct if you have a W-2, you cannot be a real estate professional?
Yes.
Right. So, talk to your CPA. There's different ways around that. A common strategy is a person will have their wife be the real estate professional.
That's true.
Right? And so, a married couple, one person can be W-2, one person can be a real estate professional. They file jointly, right?
No,
that's a really common way to do it within the rules of the law. And again, get that benefit. And so definitely, talk to them. It's a good way. And Mike says, gotcha, active income versus passive income. Absolutely.
Yeah, that's
but again,
exactly
the real
what it
estate
is.
professional is a good designation. Highly recommend looking into.
Yeah,
and
look
talk to
into
your
that,
CPAs
though.
about that.
Yeah,
And
look into that.
On
It's
next week's,
because
I've already seen that presentation. I'm guessing he's going to go through the same presentation. On next week's meetup that we're doing live on Wednesday, right, he will go into that and kind of, his thoughts on W-2 versus not, real estate professional or not, and what the kind of requirements are, right? The government has clear set of rules around what can qualify as a real estate professional.
And Shanna, can you dump the link? Okay, thank you in the comments too.
Do you know the link, Shanna, off the top?
/virtual meetup.
All right, disruptequity.com/virtual meetup. If you want to
Okay,
go
good.
check out that, I guess we
Yeah.
should have had that on there because it's important. But
Yeah,
check
no,
that
and
out.
That guy's a real professional.
A real CPA, you can ask him all the hard questions.
He'll be able to answer everything.
Me and Ben are fake professionals.
No, but we've done this enough. We kind of understand it, and I've had to field a lot of questions that I've then worked with our CPA on, right?
Absolutely.
I'm already starting to kind of get them for the new year, right? People are just trying to do tax strategies and understand how this works, right? So, any other questions?
Anyone have any more comments, questions? If not, we'll keep going. But Mondays, we do this every Monday, 3:30 Central. So if you have any questions, feel free to ask. We do a bunch of different presentations. I don't know what we're talking about next week, but this week we're talking so next week we're talking about tips for sourcing multifamily investors.
Oh, all right. So we're talking about, probably getting some passive investors. We've had a variation of this in the past, but this wasn't a popular one when we had it. So we'll kind of dive a little bit more deep on that section. But before we get to that, right? What do we got coming up next month?
Multifamily Investor
I can't believe
Network.
that's next month.
Yeah, I know. I was just thinking that.
Wow.
It's our conference coming up in 40, I don't know, I was about to make up some math, but it's 55 days, my med guess.
There you go.
But we do this, our goal is to do 3 of these a year, right? We started this the year before last, so now we can say
2019.
2 years ago.
Yeah.
And so we did the first one back then. It was a huge success, and we did 2 more that year. So our goal is to do one in our backyard, Houston, then doing West Coast and East Coast. We did LA, and then we did Boston. And then we did Houston again last February.
Yep. Then we're supposed to do San Francisco.
That got canceled, and Boston got canceled. But we're going to do it again coming up, right? We think the world is kind of calming down a little bit. End of February, February 27th.
Yeah.
Last year, for kind of reference, we had 400 people out there.
Yeah.
We had the mayor of Houston out, a bunch of different speakers, and our goal is really putting together an environment where people can network, get to meet other operators, get to meet other investors. And again, this business is all about relationships, right? And so helping foster that environment where people can build those relationships and go do bigger, better things together.
Yeah, absolutely. It's some education. You're not going to learn everything that you need to learn about this business in one day, folks, right? But we're going to try to give you the vendors that we've used, great sponsors, great speakers, right? And you're going to learn a little bit, but you're also going to have some tools and some context to walk away with and at least continue on with your journey, right, as you get educated in the space,
Absolutely.
Right? So we're giving a coupon code. I think this one's good through the end of today because this is kind of our end of the year 2021. Put that coupon code in. Get
2021.
2021. Is that what?
You said 2021, but they might have talked about something else. Yeah, the actual code is 2021.
Check out. You're going to get 20% off for today only on the MFIN. So go MFI or MF investornetwork.com and put that coupon code in there, and you get your 20% off. So
absolutely,
but yeah, those are actually selling out pretty quick. We're excited about that.
That's gonna. It's actually we're gonna limit the number of people because we want to make it a smaller. We're gonna probably we're getting a bigger room, less people to kind of mature its space. So it is actually we got a lot more interest than we expected. So check that out if you're interested.
I think there's a lot of demand. People just want to get back to some networking,
absolutely.
right? But we'll be doing that right here in Houston. So we're excited about that one.
Absolutely. And if people have questions, comments, feel free to ask them. So I know Brian Bigham says looking forward to MFIN. So
all right,
looking forward to seeing you there as well, Brian. Brian is coming up on our 3rd year sponsorship, right?
Yeah.
So obviously appreciate that.
He does a good
presentation.
And we're talking about a lot of what he does, right? Is this cost seg?
Yeah, go ask Brian the hard questions. Go check the chat. He asked the thing. Go feel free to reach out to him.
Drop your contact info in there, Brian, if you would, man.
Actually, maybe we should tell people. So Brian is who does our cost segregation study.
Brian Bingham.
Yeah.
Madison Crest.
At Madison Crest. So that's who Brian is.
I don't have his email off the top of my head. That's why I want him to drop it in the comments. Yeah, but great guy. Has saved us a ton of money in taxes over the years.
So Mike is asking, off topic, do you see any lenders lately doing mezzanine debt? So mezzanine debt, yes. Pref equity, yes. Right? Those are still around because again, those guys I don't want to say make a killing. They do really well in the way they structure their stuff. Right? That said,
all the control.
If your question was about more bridge debt, I've seen a lot less bridge debt. The bridge debt market is dried up, but it's kind of slowly coming back from kind of what we've heard.
There's definitely still some lenders out there. There's not as many lenders, right? And I'd say and that also is probably the same thing with mezz and pref too, right? There's still some guys out there, probably the bigger firms that were always going to be around.
Yeah, and so
but just be careful, right, folks? You don't want to be over leveraged, and if it makes sense with that deal, that's fine. Well, that's not usually our cup of tea, to kind of go that route, because ultimately usually people will do that because they can't raise the equity. Right, we don't tend to have that problem, and so they have to go and get another mezzanine piece on top of the debt that they have, and then only have to bring like 5% to the table, right, in terms of equity, right. But what ends up happening, right, is that mezz piece really controls a lot of the deal, right, and so your equity, could potentially be in a inferior position to the mezz piece. Let's leave it at that, right. So just be careful with that.
Absolutely.
Yep.
So
What else we got? No more questions?
People, feel
Nobody
free to
wants talk
ask.
taxes?
So Brian did include his email, bbigham, BIGHAM at madisonspecs.com. Check it out.
Cool.
And so,
Love it.
It's in the comments for those who want to find it. Also, we included a link to the virtual meetup. If you want to, next Wednesday, we are having a real estate CPA professional come out and do a online virtual webinar. Highly recommend people come with their hard
Way
questions.
better than us.
Yeah.
You know. No, this guy's actually a tax professional and knows what he's
So
talking
definitely
about.
check that out. But if not, any more comments, questions? Otherwise, we're going to call this a wrap here in another minute or two. So for those tuning in, Mondays, do this every Monday, 3:30 Central. We're excited to be back starting this year. So we're going to keep it up. Our goal is to do almost every Monday between here
Every Monday?
and the
Oh,
rest of the year. So we got to make sure Ben earns his keep here. All right.
All right. So next week, folks, just once again, tips for sourcing multifamily investors.
Yep.
So people that are looking to put their own deals together, maybe won't look to syndicate. We'll give some tips. We've talked about this in the past, right? We're going to dive a little bit deeper on this because it was actually a pretty popular topic that we had, right?
Yeah, we might do another one about taxes in February. Maybe we keep
It probably would be, and then we'll probably do another one on underwriting too, right? I think those are just those types of things you can just kind of continue to get better and learn more as you kind of get more experience in the market, right? Yeah. So cool.
All right, let's call it a wrap then. Thank you all very much. Going once. Amanda says, great info. Looking forward to MFIN. Amanda, looking forward to it as well. Hope to see you soon. Maybe we'll do something sooner. But anyways.
Yeah. Well, she can always stop by.
Yeah. Seriously, she come by, Amanda. But otherwise, let's call it a wrap. Going once.
All right.
Going twice. Thank you all very much. And we will see you all next Monday, 3:30 Central.
Money Mondays.
On our
Thanks,
Facebook
everybody.
page and our LinkedIn and everything else that we
YouTube.